Welcome to Summarize Science. We all know AI models like GPT are getting incredibly smart at passing tests, but can they handle the chaos of the real world? Specifically, can an AI beat Wall Street? Researchers at the University of Illinois decided to find out by creating a new testing ground called Live Trade Bench. This isn't a simulation with old data, it's a live environment that streams real-time market prices and news. They set up two different arenas for the AIs, the familiar US stock market and the wild, fast-paced world of poly-market prediction markets. They then unleashed 21 different mainstream AIs, from the GPT, Claude, and Grok families, to act as autonomous trading agents for 50 days. Each day, the AIs would receive the latest prices, news, and their current portfolio status. Then, they had to decide how to allocate their money to balance risk and return. So, how did they do? The first shocking result was that general intelligence does not equal trading skill. Models with the highest scores on general AI benchmarks were not the best traders. In fact, in the more volatile prediction market, being a smarter AI often meant you performed worse. This tells us that academic smarts don't necessarily translate to Wall Street smarts. The second major finding was that performance in one market doesn't carry over to another. An AI that was successful in the stock market could easily fail in prediction markets, proving that different environments require completely different strategies. Fascinatingly, the AIs also developed distinct trading personalities. Some models were very conservative, prioritizing stability and holding lots of cash. Others were aggressive risk-takers, chasing higher returns even if it meant suffering bigger losses. But were the AIs just randomly guessing? The researchers found that they were not. By analyzing their reasoning, they saw that the AIs were primarily driven by news, followed by historical price trends. For example, when the market rallied on August 28th, most models correctly identified the positive trend and moved their money from cash into tech stocks. And when the market took a sharp dive on October 10th, the AIs reacted by increasing their cash positions to protect against further losses. So let's recap the key takeaways. First, the smartest AIs on paper are not necessarily the best at making money in live markets. Second, trading skill is highly specialized and doesn't transfer well between different market types. And third, these AIs do reason and react logically to real-world events, not just guess. What this groundbreaking research means is that we are still in the very early days of creating AI that can act competently and consistently in high-stakes, dynamic environments. This work provides a vital foundation for building and testing the next generation of more adaptive, financially grounded, and maybe one day, truly intelligent agent systems. Thanks for watching Summarize Science.